Hello and welcome to day number 110, and today I want to talk to you about something that made me a whole lot of money in my early trading career, and I'm talking about triangles. If you remember that a while ago we were talking about something where we said when a price hits a certain, let's say, upper limit, let's say the price goes up, then it comes down again, it goes up again, but it doesn't go above a certain point, then we call this point here a resistance line. And what happens here is every triangle has either a support or a resistance line as a basis, and we're looking now at something that we call an ascending triangle. So this is how we can spot it, and the first thing that we look at is a support line. And ideally what we want to have is that we have as many points where we hit our support as possible, and the candles, the shadows of the candles, for example, they can go a little bit higher than that. So it's not an exact cent point, it's more like a very small narrow area. And what we want to see is that if we look at it, first of all, that we see a strong momentum for prices going up. So we can see the prices going up, the market says no at this price point, it says no at this price point again, it says no at this price point again, and every time when there is a no from the market, so we can write down a little no, no, and no here, then we will eventually realize that at one point we are breaking through and we continue to go up. So whatever happened up here at the resistance line, this green line in here, now obviously is gone and the prices keep on going up. And this is what we would call an ascending triangle. Now the beauty about it is that if we only would have the support line, so let's let's give it a name and we say support here as well. So that's our support line. If you only have the support line, we actually don't really know too much about it apart from, okay, we're breaking through, it looks like we're going up for a while, or we could go up for a while. But we don't really know anything about how big this movement is. The beauty about the triangle is that if you have the height of the triangle, so basically if we look at here the beginning, the first time where we started this upwards movement, so the height we have here, I should have used another color, let's try and do it in orange. So the height that we have here in this orange line, the height here, is basically what we would expect as our target after we broke through. So what we want to see here, first of all, what is not uncommon is that we see a retest, and a retest can even go beneath the support line. So in the early trading days when triangles were all picture perfect, they would break out and they would never come below this part here. But nowadays with all the computers that are looking at these kind of things, they try to push the price below that because many people still put their stop loss after the breakout on the support level. So they put them out of the trade, collect the things cheap, and then you can see often that the price goes up. And it doesn't need to go straight up, it can be going down in between as well. And then up here, this would be the target of our triangle. So up here, that's our target, that's where we want to go. Now, another thing that changed throughout the years is that this target here usually was reached in the early days when people started trading that, but nowadays, if you, let's say, have somewhere between 80 to 90%, so let's put something here, if you reach 80 to 90% of your target, then sometimes you might see some first reversal signs where the chart goes down and indicates, okay, we might not reach this target, and that's basically when you can start thinking about taking profits. So in terms of spotting this triangle, the very first thing, maybe we just number it and name it. So the first thing that we need to have is a support. So that would be the green line we had here, where prices go to a certain point but not further, and then do that over and over again 2, 3, 4 times. You at least need 2. If you have 3 or 4 times, it's even better. And the second thing that you want to see, let's use the same color to be consistent, is in an ascending triangle, you want to see an upwards movement. So every time we go back from where the market says no, we go down a little bit, but we never go down further than in the last swing that we saw here. So here we are higher, even here when we retest it, we will be higher. So we want to stay in an area where prices go higher and higher, but they don't break out. And as soon as they break out, that would be our point to enter. So let's mark that with a different color. Let's use, let's simply use some black. So this here would be our entry, and we need to be a little bit careful with our stop loss, because as with everything in trading, that might work, but it's not a guarantee that it will work. So we want to make sure that if it doesn't work, that we get out of the trade quite early. So in the early days, as I said, we could put our stop loss on the support line, but nowadays that doesn't work anymore. So I usually have a look at these swings, and I would put my stop loss somewhere here initially, and as soon as we have the retest and we have a new higher high here, I moved my stop loss up, make sure that whatever happens stays in the profit zone, and as soon as I reach my target or come close to my target, I move my stop loss again. So let's say if we are somewhere here in the 80 to 90% region, I would move it at this point, and then I will see whether the price really goes up further, and then I will use the candles in order to move my prices higher. Or if you are at a turning point, then I will get stopped out anyway, but would have reached quite a nice range of that trading movement. The key here, so let's put in the other things that we will need. So 3 is our entry point, that's when we break through the support line, and 4 would be our target. And of course we always need to stop loss, so we don't get caught in a wrong trade and turn around and lose it all again. So that would be the ascending triangle, and we can nicely trade that. And as with everything in trading, if we have an ascending triangle, we also have a descending triangle. So that would be exactly the opposite. So let's call it descending triangle. And what we have here is that prices go down, but to a point where the market says no again, not any further. We go up again, we come down again, the market says no for another time, we go up again, and here we can already see we're not going higher than the last high that we had here. So prices want to go deeper and deeper, and then eventually the resistance that we have here. So let's draw this in. So that would be our number 1. The first thing we have to spot is our resistance line. And we want to see that prices here are in a downwards movement. So here we see it's clearly going down. And if we would have a movement in between where we would go up higher, then we have a change in the trend, and then our triangle idea wouldn't be valid anymore, so we wouldn't care about it. Number 3 that we have here would be our entry. And as we said before, it's not uncommon that we have a retest where we go up. Ideally, in an ideal world, we would go to a resistance line and then go down, but nowadays sometimes we go back further and then we go down and down further. And again here, what do we have as well? Now we need a different color. Let's use the green. So here we have the height of our triangle. So it depends on where we start that downwards movement. If we, let's say, would have the same thing here, our downwards movement would start here. However, let's make it a little bit clearer. If we had something like this and we go up here, then the beginning of our triangle would be here because we have some nice upwards movement, and this one here, wherever it comes from, wouldn't be part of our resistance line here. So, sorry, our support line here. I wrote it all wrong. So this here is our resistance line. That's why I initially used the colors, and this here would be our support line. I'm sorry for that. So here's our support, because that's where our prices get some support. And up here, of course, there's our resistance line. So that's the resistance. And depending on which swing belongs to our formation, we would start to measure the height of the triangle, and we would go down and have that height here, and that's our target again. So that would be our number 4 in this scenario. And then we are done. And again, if you reach like 80 or 90% of that movement, let's say 80 to 90%, we get cautious and we want to make sure that we don't lose all of our earnings anymore. And a very big thing for both of them is pretty much that whatever you do, and that's very, very, very important, you want to always in trading pretty much have an asymmetric risk-reward ratio. Risk-reward ratio. What do I mean? So basically, if we have our area here, which is our stop loss, or in this case, so that's our entry price up here, and this is where we get stopped out, and that would be our area where we automatically go out of the trade, and that defines our risk. So let's assume that our risk would be, let's say, 100 euro or 100 US dollar, whatever the currency is you're trading in. You want to make sure that the reward on the other side, so whatever you have here in the height of the triangle, to put another bracket in here, so that would be equally the height of the triangle. That needs to be a multiple of the risk, so that needs to be at least 2 times the money that you risk, because otherwise we wouldn't be interested. So let's say our reward is somewhere up here, and that needs to be 2 times our risk, or more. The more the better. So sometimes, depending on if you have very huge triangles, especially in swing trading, in certain commodities, you can have like very huge triangles that go over weeks and months. And if you are happy enough or lucky enough to catch one of them, you can have sometimes like 5, 6, 7, 8 times your risk, and that's when you make a lot of money. So always make sure that as a rule your risk needs to be bigger than, smaller of course. Your reward needs to be bigger, but your risk, let's write it in the other way, so your reward needs to be at least bigger than 2 times your risk. Otherwise, I personally would never be interested in trading whatever it is, because I want to make sure that even if I have some silly trades in there that I make a lot of money, and I only can make that, let's say we are in a 50-50 environment, if I make sure that I always aim for 2 times whatever I risk. So let's say I risk 100 here, that's a losing trade, so here I got minus 100, and the next trade in a 50-50 environment should be a winner statistically, but of course we can have several losers in a row, so that's a different thing for me to explain. However, if on average every time I lose 100 I earn 200, I will be very, very well off if I trade hundreds of times. Otherwise, it becomes a little bit more tricky, especially if for some reason, for example, I should have a phase where markets work a little bit differently and I only have 40% winners and 60% losers. Then all these numbers ensure that I still make at least some money, and then I might have some lucky times where I make 60%. So where I win 60 and where I lose only 40, that's when a lot of money comes in. However, I want to make sure that even in times when trading wouldn't work great, that I still make a lot of money. So these are the 2 types of triangles I wanted to talk about you today. So ascending triangle and descending triangle. The basis of it is, and maybe you want to have a look at a video that we did a while ago when we were talking about support and resistance lines. So that's always the basis. We always want to have a resistance line up here or a support line down here where the prices are going up, as in our ascending triangle, or going down in our descending triangle. We want to see a clear downwards movement, and we want to see the market say no to prices several times before we break through. That would be our entry. And the nice thing about triangles is that they give you roughly an idea where the price movement might go, and that's why I used to like them a lot. Nowadays, of course, I trade a lot of different strategies, but I still like trading these triangles from time to time, and I used to make a lot of money, especially in my early days. So that's what I wanted to share with you. Thank you very much for watching. Tomorrow we will be back in the markets using some even more sophisticated methods and aim to make some money again. I will give you the update in the evening, how it went, what we traded. Looks like we got a few new trades that we can enter tomorrow. So looking forward to this. Thank you very much for watching. Have a great evening and goodbye.